Welcome into the Finance Report. Hi, I'm David Wogenson. Over the next half hour, we'll be breaking down the keys to having a successful retirement. This will include taxes, income, protection, and so much more. Joining us now are Mark Dillon and David Linsky. The father-son team are with L3 Family Wealth Partners, a West Palm firm that focuses on preparing people for a successful retirement. They're also popular radio show hosts. So, Mark, what do you believe the future of taxes looks like?
Well, David, as I said in past shows, key provisions to the tax code are expected to expire in 2025. Now, obviously, the direction of taxes is as much fiscal as it is political, as it is economical. But generally speaking, we believe tax rates are going up, which equates to less money in people's pockets unless they begin the tax planning process now.
Oh, absolutely. So, Dillon, are there ways to potentially lessen our tax liability in retirement?
In many cases, the answer is yes.
Okay, great.
But it all starts with the tax portion of a comprehensive financial plan.
Okay.
Or what we refer to as a retirement reality report. So, David, throughout the show, when we're talking about a retirement reality report, just know that these are the customized plans that we put together for every one of our clients. And you know what? It's so ironic because taxes are such an important component.
Sure.
Yet it's an area that's so commonly overlooked by many advisors.
But in their defense, most advisors are so focused on making their clients money that many times they completely ignore the tax liability when it comes to true financial planning.
Yeah, and that may be true, but another way to look at it is money saved is money earned.
It's a good way to look at it.
Good point.
Yeah.
I raised him well.
You did. All right, so David, is it possible then to put our retirements in a lower tax bracket?
We've had a lot of success in helping our clients lower their tax liability in retirement, but it all starts with educating the client. For example, what is a Roth conversion and how does it work? Or how can we take money from a life insurance policy to help supplement our income in retirement? And David, there's no better feeling for us when we're in the conference room and a client suddenly has that aha moment. The light bulb goes off and they truly understand what it is we're teaching them.
Now, that can be a huge difference right there. So, Dillon, we're talking about the importance of tax planning. We're talking about how it could be potentially your largest expense in retirement. So what is the potential cost of overlooking taxes?
Oh, wow. I mean, it could be tens of thousands of dollars over the course of someone's retirement. And with life expectancy continuing to rise, the opportunity to save on taxes has never been greater. Overlooking taxes is unacceptable, unnecessary.
Okay.
Truthfully, it's lazy, in my opinion. As long as the advisor is willing to put the time in, collaborate with their clients, go on the journey with them through the educational process, only good things should come from that. We want to work with clients who want more out of their advisors. Clients that want to learn and implement strategies on ways to save money on taxes.
Well, look, I don't want to speak for our viewers at home, but I think they probably find it refreshing, the adjectives you're using there, because it truly is such an important part of retirement. So, David, how do we go about protecting our retirements from what we believe are going to be future tax increases?
My dad started the show by saying, we believe tax rates are going up in the near future. So if we agree with that philosophy, then we'd also probably agree that taxes are currently on sale. So in some situations, we recommend to our clients a IRA Roth conversion.
Okay.
For example, pay the tax now and enjoy tax-free income later when it really counts.
Exactly. I mean, there's basically 4 ways to grow your money. Taxable, tax-free,
Yep, sign me up.
tax-deferred, and tax-advantaged. What's right for one person may not be right for another. That's why it's so important to have an open and honest relationship with your financial advisor, and of course, a solid tax plan.
Yeah, no, absolutely. So, Mark, if someone goes about taking full advantage of tax planning, what could their retirement potentially look like?
Well, David, there's a reason why passive income is so important in retirement. It fuels our lifestyle without having to work.
Yeah.
So it would make sense that the more money you keep, the more wonderful things you could experience in retirement. And it all comes down to one thing: tax planning.
Tax planning.
And that's why we always say it's not what you earn, it's what you keep that really matters the most.
No, absolutely makes a lot of sense. Great start to the show, gentlemen. Really appreciate it. So for you at home, if you want to learn more about having a solid tax plan for your retirement, L3 Family Wealth Partners has a great offer for you. Right now, for the first 5 callers with a portfolio of $500,000 or greater, they're offering a complimentary retirement reality report just for you. This will allow their team to sit down with you personally and provide you with a roadmap, analyzing where you are right now and discuss your best steps to really get ready for a successful retirement. The number to call, 561-933-6877. That's 561-933-6877. All right, let's go ahead and dive into some income. David, once we get to retirement, the paycheck stops, but the bills, they keep on coming. So what are retirees to do about this?
Well, obviously, David, income planning is a top priority once you get to retirement, but we have to plan for it in the most tax-efficient manner. We also have to take a portion of our assets and protect them and have them go for growth so they can keep up with that dreaded word. We're seeing a lot of it, inflation.
Inflation.
And on top of that, the last thing we want to have happen is running out of money in retirement, especially because we've been drawing too much principal out in the early years. Now, the good thing is there's a solution.
Okay, great.
And that's generating enough income from all the different components of your retirement plan. And when we do this properly, keyword properly, that should replace your paycheck.
All right, well, I'm going to piggyback off that, Dylan. If someone comes to you all, says, hey, I've got Social Security, I've got a pension to rely on, is that typically enough income for retirement?
Well, Social Security is wonderful because it's guaranteed income for life. However, it's typically not nearly enough to carry someone through retirement. And employer pensions, if you have them, they're great. But fewer and fewer people are retiring with employer pensions, and instead they have 401ks and 403bs. This shifts the responsibility from the employer to the employee in terms of generating income in retirement. The good news is there are investment programs today that you could transfer your retirement assets into that will now function and act as your own personal pension. So what I mean by this is if you fund these vehicles with a portion of your retirement assets, in turn, you will begin generating a guaranteed monthly income stream, not only for your life, but God forbid something happens to you, the life of your spouse as well.
Exactly. And what Dylan's talking about is when we design our plans for our clients in retirement, we believe strongly in diversification of income sources. So for example, interest on bonds, dividends on stocks, and income from fixed annuities, just to name a few.
The bottom line, David, the more income sources that we have in retirement, the less we have to worry about running out of money.
Yeah, absolutely. Look, no one's probably coming through your door saying, I have too much income. This is a big problem. No one's ever complained. I mean, income's what makes the world go round in retirement. I listened to you when you said that. So, Mark, you've worked decades to get here. If you're in retirement, you're right on the doorstep. I imagine, though, this income's going to help people potentially increase their lifestyle.
I think that most people want to just maintain their standard of living in retirement. Listen, people want to generate the same income range. They just want to spend their money differently. Travel, entertainment, maybe just being with family and friends. But like you just said, David, people have worked decades to get here. They just want, and quite frankly, deserve to maintain and enjoy their standard of living in retirement without having the stress of worrying about money.
Absolutely. I don't think anybody will disagree with you there. So for you at home, if you want to learn more about putting together your income plan, L3 Family Wealth Partners has a great offer for you. Right now, for the first 5 callers with a portfolio of $500,000 or greater, they're offering a complimentary retirement reality report just for you. This will allow their team to sit down with you personally and provide you with a roadmap, analyzing where you are right now and discuss your best steps to really get ready for a successful retirement. The number to call, 561-933-6877. That's 561-933-6877. All right, taxes, obviously such a big focus for retirement, so is income. But Mark, protecting your assets at this stage of life can be critical for retirement. What do you think the pulse is for retirees given market volatility?
Quite frankly, David, I think people are worried, and rightfully so. Imagine you're driving at night in an area where you've never been before, and it's downpouring. you don't have a GPS system in your car,
Not good for me.
and your phone's dead.
Okay, really bad.
You got this?
I'm really in trouble.
Well, that's how many people feel about retirement prior to coming in and spending time with us.
Okay.
Now imagine the exact same scenario, except your phone is completely charged and you have a state-of-the-art GPS system built into your car.
I like this scenario.
With all the bells and whistles.
Okay.
That's how many people feel when they actually leave our office. Now, obviously, David, we can't control the stock market any more than we control the weather.
Yeah.
But we can control the comfort, the security, and the guidance of the journey. Remember, the most important thing here is that the number one fear in retirement, it's not death, it's poverty.
Yeah, nobody wants to end up in that situation, so take control of what you can take control of. Dylan, the volatility, should we be surprised, especially after we went on this incredible run?
Okay, so trying to keep on my dad's nice, vivid, elaborate weather
It brought me
analogy
in. So in case this financial planning thing
He
doesn't
sure
work,
knows
be
how
an
to paint
author.
a
Be an
picture.
author.
Yeah.
Or weatherman.
Okay, that too.
Yeah, but winter always follows summer.
Yes.
So if we know this and we're prepared for it, then it shouldn't be a surprise at all. And it's no different with the economy. Recession follows expansion. Look, the stock market's going to go up and the stock market's going to go down. And that's all well and good until we enter retirement, because then we shift from an accumulation mindset to more of a distribution mindset.
Okay.
But again, as long as we're prepared and we have a comprehensive financial plan that's built to withstand any different market condition, then even in an extended winter or an extended recession, it shouldn't be an issue at all.
But David, when it comes to the market, I mean, it's not saying completely get out and just stash all your money under a mattress.
We learned in 2022 kind of a new term in the financial planning world, inflation. Inflation's at 40-year highs. Stashing your money under your mattress, that is a sure way not to protect it. When we talk to our clients about protecting their assets, we usually mean either protecting their principal against downside volatility in the stock market, or more commonly, we talk about protecting their income stream, not just for the client's life, but for the life of their spouse as well. Because David, the number one concern for individuals in retirement, outliving their money.
Yeah, no winners right there. Okay, I'm going to tee you up again to tell a story right now, or at least paint a picture, because you did so well before with all of that. No more scary tactics, though, on me right now. I need my GPS, I need my cell phone. But let's paint a picture for the viewer at home.
Absolutely.
What can a big loss really look like for someone in retirement?
It could be absolutely devastating. And let me give you an example. So we have a client who was expected to retire in the end of 2021. Okay. Now, at the time, he had a very substantial nest egg, but he also had a very elaborate lifestyle.
All right.
Now, this was a guy that was, we call a do-it-yourselfer. And honestly, he did really well in the stock market, growing his assets. But when it came time to retire, we strongly suggested that he protect some of those assets and reinvest them into more conservative type programs like short-term bonds and fixed annuities.
All right.
Unfortunately, he didn't listen. And that elaborate lifestyle has been dramatically affected. When people decide to retire, they have to have a shift in their mindset to a more conservative, income-oriented strategy. Because at the end of the day, David, they don't have the time or the paychecks to really make up big losses.
After all, they've already won the game at this stage of life,
That's
especially
what
if you
we're
have that
saying.
type of a nest egg. But here I am going to say this. After talking about winning the game, I'm going to play devil's advocate.
Okay.
If I get out of the market, am I forfeiting growth?
Absolutely not. And you can't completely forfeit growth and only focus on preservation of principal if you want to keep up with inflation. As a result, there are investment vehicles today that are designed to capture growth to a limit in years where the market does well. But in years where the market's negative, you stay flat and you don't lose any value. So instead of that volatility graph that you've seen hundreds of times where it goes up, it's down, it's up, it's down, it looks a little bit something like this. Think of it more like a step chart or a step ladder. In years where the market does well, your account goes up. In years where the market doesn't perform, you stay flat. So you're up, you're flat, you're up, you're flat. So you might not be able to capture the full potential of the stock market growth, but you are fully protecting your downside in years where the market is negative. And this is something, a phrase I guess my dad has been saying since as long as I can remember, and maybe you should just take it. What's the phrase you like to say?
Zero is a hero.
Zero is a hero.
And there it is.
Yeah, and I know it sounds a little bit corny, but it is true. This is when zero is a hero. When people are down and their accounts are down, but you stay flat in that year, that's a really powerful thing. So just to use an example, let's compare investing in this type of strategy versus directly in the market. So let's use $100,000 as an example. But again, this is for just conceptual and projection purposes only. So the first year, your $100,000 goes up 10%. You get $110,000.
All right.
The next year, you get another 10%. You're up to $121,000.
Nice.
But as we've seen with 2021 and 2022, nothing lasts forever.
Yep.
So now the next year, the market goes down 20%. So if you were invested directly in the stock market, your account would drop all the way down to $96,800. It's actually worth less than when you started. But if you're invested in one of these protected growth vehicles, you would stay flat in that year and your account would stay at $121,000. This is the power of not taking losses in years where the market doesn't perform.
David, this is one route to go, but I can understand why it might be confusing for retirees out there, because if you're listening to Wall Street says grow your money at all costs.
The funny thing about that is Wall Street doesn't really care whether we make or lose money.
Okay.
They make their money on the movement of our money, the buying and the selling. At our firm, we have a completely different approach. We believe in a buy and hold strategy for some equities. As long as these companies are big, blue chip stocks, consistently producing their dividends and have strong track records, then we actually believe in holding those stocks for the long term. And my brother just said it perfectly. Diversification of assets is so important in retirement. And we're saying these strategies can complement what Wall Street's saying. Don't just be in stocks and bonds. Utilize these new innovative programs to help reduce your risk in retirement.
I want to make sure you heard that. He said you said it perfectly. So little brother giving you props right there.
And that was recorded, right?
Yeah, it is recorded. We've got that down. So Mark, how have you seen retirees get ahead with an income growth strategy?
So my grandfather used to tell me stories about back in the day when people would retire. They would get a pension, Social Security, and a gold watch.
Good old days.
Now, they would live probably another 10 years or so, and that pretty much was their retirement.
All right.
Boy, have things changed. Today, pensions are almost obsolete. People are living longer than ever in retirement, and no more gold watches.
Yeah.
So the financial responsibility has now shifted and now falls on the shoulders of the individual retiree, not the companies where they work. So at our firm, L3 Family Wealth Partners, what we try to do is help take this responsibility off the shoulders of our clients by showing them protected income strategies, which will give them guaranteed income for life, but not just for the retiree, but for the retiree's spouse as well. Because as we said many times already today, the number one concern in retirement is outliving your money.
Absolutely. You do not want that to happen. Very powerful information. So for you at home, if you want to learn more about protecting and growing your money, L3 Family Wealth Partners has a great offer for you. Right now, for the first 5 callers with a portfolio of $500,000 or greater, they're offering a complimentary retirement reality report just for you. This will allow their team to sit down with you personally and provide you with a roadmap, analyzing where you are right now and discuss your best steps to really get ready for a successful retirement. The number to call, 561-933-6877. That's 561-933-6877. So it's been a jam-packed show, a lot to take in. And then today we've got interest rates, we've got inflation, we've got market volatility. It can be confusing, perhaps even scary for retirees. But Mark, what's the worst thing they can do? Be stuck in fear, not do anything?
David, sometimes making the decision to do nothing is the worst decision of all. And I'll tell you why I say this. So a few years ago, I had a toothache.
All right.
Nothing terrible, so I chose to ignore it. Do I have to tell you the end of the story?
You're a good storyteller, so please do.
My dentist said to me, Mark, if you just would have came into the office instead of doing nothing, you could have avoided a lot of pain and a lot of suffering. My wife, Molly, always says, you have to be your own best self-advocate. Right, boys?
She says that.
Says it all the time. You have to be proactive with your life, David, especially when things seem scary. Do your research.
Okay.
Find a financial advisor that you're comfortable with, someone you can trust. And please, by all means, make sure that they are a certified financial planner.
Okay.
Because a certified financial planner or a CFP is held to the highest standards within our investment industry.
But Dylan, what can people do then to take the guesswork out of planning for retirement?
Well, first and foremost, they should work with a financial advisor who specializes in building comprehensive financial plans for retirement.
Okay.
We call our plan the Retirement Reality Report. Second, if you can, try to work with a financial advisor who has a local presence in the community where you live. Emails and Zoom calls, they're all fine, but there's no substitute for a face-to-face meeting. And finally, make sure that you like the people that you're working with.
Sure.
Hopefully, they're going to be a big part of your life and the life of your family as well. That's why at L3 Family Wealth Partners, our tagline is, from our family to yours.
Oh, absolutely. But David, let me ask you this. What does it mean to truly be able to afford retirement?
It means you're generating enough monthly income to cover your monthly living expenses. Pretty simple, right?
Yes, sounds like it.
Definitely not always easy, though. So what we have to do is develop a plan, a written plan that outlines where you are today, takes you through retirement and the rest of your life. But you have to be able to tweak it when necessary. Things come up, changes have to be made. And you have to have an open and honest line of communication with your advisor. We do this for our clients. Dylan just said, our Retirement Reality Report. It's a customized plan, no cookie cutter plans for our clients.
Great.
Make sure it's unique for them. And if we do this properly, they should have their income covered throughout their retirement.
No, it makes a lot of sense because no one wants to go into retirement and be forced to spend less.
Absolutely. Listen, as we said many times already today, people just want to maintain their standard of living in retirement, and they don't want to have to worry about, God forbid, ever running out of money.
Yeah, got a plan for the expected and the unexpected. Thank you,
Exactly.
gentlemen. So for you at home, if you want to learn more about making the right calls for your retirement, L3 Family Wealth Partners has a great offer for you. Right now, for the first 5 callers with a portfolio of $500,000 or greater, they're offering a complimentary Retirement Reality Report just for you. This will allow their team to sit down with you personally and provide you with a roadmap, analyzing where you are right now and discuss your best steps to really get ready for a successful retirement, a game plan to get you where you need to be. The number to call, 561-933-6877. That's 561-933-6877. All right, time to close things out, and we're going to do a deep dive. We've heard a lot about the Retirement Reality Report, but what it really entails, that's what we're going to talk about right now. So break it down for us, Dylan.
So before I jump into what a Retirement Reality Report is, I like to first start by saying what it's not.
Okay.
An account statement is not a comprehensive financial plan. So often, when people come into our office for the first time, they'll hand us their account statement and they'll say, this is our plan. This is part of the plan. It is in no ways the total plan. A true Retirement Reality Report must consist of all 6 core components.
All right.
Number 1, income, what you earn. Number 2, taxes, what you keep. Number 3, growth, ways to keep up with inflation.
Yeah.
Number 4, protection, managing your downside and focusing on preservation of principal. Number 5, lifestyle, managing your spending habits and understanding your needs for liquidity. And finally, number 6, your legacy plan, what you leave behind. If any of these 6 core components aren't fully addressed, then the plan is not complete. This should be a hard copy plan, and this is what someone can expect when they come into our office and we develop their own retirement reality report.
No, absolutely. You want that complete plan. I'd like to dive into this. You all have talked about how you certainly want to like the people that you're working with, that you're managing your money. If a client comes in, it's important that they like the financial advisor, the CFP.
Absolutely.
L3, what exactly does it mean?
Well, it means a few things. To me, obviously, it represents Linsky, Linsky, and Linsky.
Yeah. Yep.
So I feel so blessed to have the
Sure.
ability to be working with my children, my two sons, and work together every single day. So on a personal note, that's what L3 means to me. But David, explain the real reason we decided to call the company L3.
Well, I'll first start by saying we really appreciate the guidance that our father has instilled in us while we've been working together.
Sure.
But L3 to me also means life, longevity, and legacy.
All right.
Those are the three main pillars of our financial planning firm. We believe life, understanding how to plan for now, taking care of your income and your life expenses, but making sure that goes throughout the entirety of your retirement, that longevity, making sure that your assets and your income are going to last you throughout your entire retirement. And the third one, legacy. My brother and I talk about it a lot. Making sure that you have the beneficiary designations in line properly, and that when something does happen to you, your assets are passed down in the manner you want them to be passed down. And just as importantly, they're not taxed crazily, and they could hopefully pass through probate.
Yeah, and I think legacy is a really important word because obviously it's so important for our clients to have a really good legacy plan. But something that kind of distinguishes us as a family business and makes us different is we have a legacy plan and something that we're working on our legacy that we're blessed to have through our dad.
Yeah.
And we all kind of bring different strengths to the table. I know before he was talking about his experiences with his grandfather and how he instilled a lot of morals and ethics in him. And he runs the business a certain way. And we kind of bring a little bit of new and innovative strategies to the practice. And it's a great way to kind of balance each other out. But everything that we do is with the same principles and guidelines that our dads instilled in us. So that's something that a client can expect, not just today, not just in 5 years, not just in 10 years, but well down the road. And hopefully, some point, we'll have a legacy plan within our business that we can also pass down for another generation.
Yeah, no, that's tremendous right there. I really appreciate you guys unpacking. I'm sure the viewers at home do as well. And before we go, Mark, I know you have a very special offer for our viewers at home.
That's right. For the first 5 callers that have saved $500,000 or more for retirement, we would like to invite them into our office where we will sit down with them personally to help them create their very own retirement reality report. And David, we're going to do this on a complimentary basis.
A very generous offer. So for you at home, now is when to take action. If you want to get your retirement in order, L3 Family Wealth Partners has a great offer for you. Right now, for the first 5 callers with a portfolio of $500,000 or greater, they're offering a complimentary retirement reality report just for you. This will allow their team to sit down with you personally and provide you with a roadmap, analyzing where you are right now and discuss your best steps to really get ready for a successful retirement. The number to call, 561-933-6877. And for all of us at the Finance Report, thanks for watching, and we'll see you back here next time.